Hey guys, it is Mark Co for the 4th of December. Just wanted to take a look at markets today, and the big focus is going to be on stocks and kind of the meltdown. And I just want to kind of look back to what we started the week talking about. Um, so I started the week saying, you're going to see a lot of financial news focused on this Trump President Xi meeting and that there was potentially a more positive outcome. Well, what I really want to look at is the focus on levels and how none of this news, really sways it from the standpoint to take it away from the levels. It's still what the reaction is at the levels. And I know when short-term people tend to focus on kind of the news of the day, it gets real exciting. But at the end of the day, I want to show you the levels we've been focused on, and again, how the market continues to react. The market has been in a kind of sell the rally mode for some time, and it's changed, different than it was, I'd say, for the last 8, 9, 10 years. But now you're in an environment where volatility is picking up. You're seeing an increase in these sell-offs. And the rallies have been pretty strong too, but really this is the focus Sunday night. It gaps higher, and what I told everybody is this top edge remains 28.17 to 25. It's got to be sold or at a minimum take profits. And when you walk in on a Sunday, you're looking at a market that's gapping higher. People are excited. Oh, this is going to be the Santa Claus rally. Well, here it is. It's only Tuesday, and the Santa Claus rally thought process is probably far from people's minds. They're sitting there looking at a 770 point day down in the Dow and going, what just happened? We're trading 2700s. But really, the only spots to look at in the E-minis were this kind of 27, 25, 26 area in terms of support. And the E-minis got right through it. And I always like to look at it from a standpoint of who takes it away from a level. Well, in this case, sellers took it away, tapped it right back to the level. So it's really important to understand, although the volatility has increased, and it has, I think it's a good thing, but also you still have to keep the focus on levels and bigger picture. And I know when you're short-term focused and intraday focused, it gets really enticing to stare at 5-minute, 1-minute, 3-minute charts, something of that nature. But there's a lot of value in understanding what bigger picture levels are. And at the end of the day, I know this is terribly exciting, down 700 points. It's still top edge 28 17 to 25 and bottom edge 26.30s. You're about in the middle of the road. So any type of movement is fair game, and you would certainly favor the sell side up at the top, and you'd favor some long activity at the bottom. But this is still middle of the road, and it's the increase in volatility that you have to be aware of to understand you don't have a lot to lean on. And that's what I said in Sunday night's briefing, that there's just not a lot to lean on in here. So be careful. Be aware of where the real support comes in, and beyond that, get out of the way until you see actual support or resistance. So anyway, I hope everybody's staying safe out there. It has certainly been a little more exciting today in equities. Currencies have still been fairly range bound, but we started the week off with a weaker dollar viewpoint. We've seen weaker dollar today, and then an increase in the dollar later in the day. So we've seen a little bit of it both, and developed market FX has certainly maintained recent ranges. So anyway, for the 4th of December, Mark Co, cheers, and we'll talk to you guys soon.